Hello and welcome to another edition of the Moving Iron Podcast. This podcast is proudly provided by Axon, helping dealers move more iron for almost 100 years. Find out more at axontire.com. Axon was started almost 100 years ago out of a passion for keeping agriculture moving. It's that same passion that drives them today. With a vision for a better experience for both farmer and dealer, they set out to create a better way to move more iron. When you partner with Axon, you get immediate access to a full range of products and solutions designed to meet the complex needs of today's grower. Axon carries all major brands and sizes of tires, wheels, and tracks. From custom colors and sizes to fully customized wheels, you can have the solution for virtually any problem today's farmer is trying to solve. To find more or become an Axon dealer, please visit axontire.com. This podcast is also brought to you by Valley Transportation. Valley has over 33 years in the trucking business, moving ag and construction equipment across the country. For more information, go to valleytransinc.com or give Parker a call at 800-657-4910. At Valley Transportation, our goal is to help you reach yours.
Moving iron in the 21st century. Hard-working people working hard for you and me. Time and time again, through the years you'll find us here. Moving Iron.
Hello and welcome to Moving Iron Podcast. Marcus with Shawn Hackett. This edition of the Moving Iron Podcast is brought to you by Axon Tire, helping dealers move more iron for the past 100 years. For more information, go to axontire.com. Also, Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. And no matter how you buy ag equipment from a dealer, auction, or a private party, agdirect.com can help you find it. Not find it, finance it. You can even apply online at agdirect.com. Learn more about your financing options at agdirect.com. Shawn Hackett is with Hackett Financial out of Boca Raton, Florida. And Shawn, man, I'm over about 5 this week on that. I can't seem to get through there.
I think you meant to say help you find finance.
Well, that's probably what what they call a Freudian slip, right? There we go. That's what. Right on, man. Well, how you been, Shawn?
Good, really, really good.
How's the weather in Florida? Is it still below zero? Or I guess below zero in Florida is a relative term, but I mean, is it still parka weather down there?
Well, we actually had a lot of rain. Very unusual.
Yeah.
It's our dry season. It's just very wet winter for us. All the lakes are full and everything's green. It's just we just got a bunch of rain last night, so yeah. We're fertile down here. We're fertile.
Right on. Well,
crops look great down here.
Right on. Well, I mean, there's a lot of weather going on in that area right now. I mean, on the eastern seaboard anyway. I mean, there's pretty big cold snap. A lot of cold weather pulling through there. Especially when you get up north into like New York, Pennsylvania, New England, those areas where we're having some like record cold temperatures. A friend of mine from South Carolina, North Carolina. Just sent him, I saw a Facebook post. They're supposed to get 6 to 10 inches of snow, which is a freaking unheard of amount of snow for that part of the world.
Yeah, that's a blizzard. That's a blizzard for them.
Yeah,
that's a blizzard. Yeah.
So a lot of weather things happening right now, and a lot of things to pay attention to. Stuff you've talked about on this podcast quite a bit. So a lot of that stuff's coming. I just wish some of that moisture would make its way a little further west, so we could get some of that out here. But we get the cold for sure. We got the cold part, but.
It's going to shift a little bit. You're going to the pattern is going to shift a little bit more west. So I think you're going to start getting more of that moisture. And we've had kind of an central eastern based cold and stormy pattern. It's going to shift more central west here as we get in the first part of February. So it's going to shift to your way. You're going to get some of that because definitely need some of that moisture out your way for sure.
Definitely do. So, all right, Shawn, let's talk a little about what's going on out here in the marketplace. A lot of news popped up on the energy front here. You've got Russia ever so closely more looking at the Ukraine situation. So you got some geopolitical things popping up there. But the price of oil kind of broke through the $85 mark here this week. And it is flirting with going higher every day. So I guess as you take a look what's going on in oil and energies in general, what do you see happening there?
Well, I think the market's trying to determine how long is it going to take for either the Middle East to turn the spigots on or for the U.S. production to rebound. And neither one has really shown clear signs that it's going to do that yet, despite prices being fairly attractive. And so you're looking at very substantial drawdowns in crude oil inventories. And so the market continues to feel that, it needs to continue to encourage the Middle East and U.S. to bring some production back in. And until it sees the whites of the eyes of either one of those factors contributing, it's going to stay firm as it has.
Yep.
As it has.
Right. Yep. Right on. You put a report out here earlier this week that we kind of read through, and we've talked about cocoa, I think maybe one time on this podcast, and explain what you were kind of talking about a little bit in your report you put out about cocoa and how it was having a run up here.
Well, we've been stuck in a 2-year La Nina pattern, as you know, in case we've talked about this at your conferences and on your show. And that tends to produce very good weather for West Africa, where they produce 70% of all the cocoa. And so we've had big production, and it was the worst. I think it was the worst performing ag market last year was cocoa. But our forecast, as we've been hinting, is we're going to be ending this La Nina. We're going to be shifting towards an El Nino later in 22 and into 23, and that shifts the emphasis of where weather is poor. And there's a very, very high correlation between dry weather or drought in West Africa as you approach and go through El Nino periods, a very reliable cycle. And I think the point we're trying to make is if we're going into this cycle, then that's a market that can have an outperforming or outperform to the upside, because they don't grow corn, they don't grow soybeans, they don't grow wheat in West Africa. They just grow cocoa. So it's kind of an isolated weather event that will impact cocoa independently of other markets. And so cocoa has a history of really being an independent mover, meaning down or up against the grain. And so we think we're entering a period where this cocoa market could potentially wake up and start to see some more adverse weather. And what we will also say is, because prices have remained depressed for so long, it's a tree crop like coffee, like oranges. And if you deprive a tree crop of investment, of husbandry, of fertilizer, of insecticide, of all the things of replanting old trees, it rapidly degrades, and you simply cannot turn that production spigot back on immediately when you want to. And so this past year, for example, we had greenhouse conditions in West Africa, yet Ivory Coast, which is like the Brazil of cocoa, their arrivals for the main crop are down, in excess of 5%, despite perfect weather. So if perfect weather is producing a short crop, Casey, what happens if we get less than perfect weather? It could be a real significant reduction in production at a time that post-Omicron, we might actually see demand for cocoa start to rebound substantially again. So we think this is an interesting place to look. And so it's kind of a market we think is, could be a top, in the top list of performers like coffee was last year. I think coffee was the number 1 or number 2 performing ag market in the whole ag commodity complex. So,
yeah. Okay. Talk a little bit about cotton here for just a second. Cotton has had a pretty substantial run up here over the last week, really, since the USDA market report came out. And right now we're looking at prices up to that $1.22 a pound range. And I tell you what, that's almost a 15-cent run up from what it was pre-report. So I guess as you take a look at cotton, what do you see as some of those driving factors there right now?
Well, I mean, the old crop is super tight because China bought everything. So we know we don't really have a lot of cotton lying around. And of course, we also know that cotton demand competes with synthetic fiber, which is crude oil produced. Crude oil keeps going up. That means that cotton has to maintain a competitive edge against, polyester and such forth and so on. So There has always been a pretty tight correlation between the direction of crude oil prices and the direction of cotton prices, up or down. And so that's another driving factor. And, it's just that's where we're at. And so the market is saying, we have to get these acres in. Now new crop cotton, December 22 cotton, hit $1. I'm trying to look. I don't know if we've ever had the following year's crop traded $1. I'm not saying spot price. I'm talking about deferred price. That might be the first time we've seen. I have to take a look. If it's happened, maybe it's only happened once before, that you had a $1 price for the next crop coming. Yeah. Pretty amazing. Yeah. I mean, that is insanely profitable for cotton farmers. So look, lots of things can happen. Maybe China buys it all over again, but I don't know. If I'm a cotton farmer and I got $1, I can lock in $1 a pound price for my next crop. Shoot, I could just, protect that risk, sell that price, or, do whatever you have to do to make sure you got it and take the rest of the year off. I mean, I just don't, even if you have a short crop, you're going to make money at $1, Casey. So, right. I certainly, if I'm a cotton producer, would be wanting to do something to make sure I don't let that price slip away on new crop cotton, because it's highly likely by the time we get to late summer, fall, we're going to have a whole lot more cotton lying around here in the U.S. than we have today. And that $1 price for December 22 cotton is not likely going to be still sitting at $1. That would be my suspicion. Right. That's my suspicion.
Right on.
So.
All right, let's talk about soybean crush and soybean meal and those kind of things, soybean oil and those kind of things. I think November was a record month for soybean crush and soybean oil and those kind of things. And as you take a look going into December, nothing really slowed down much. So I guess as you look at that market right now, what are your thoughts there?
Biodiesel, renewable diesel. And it's the gold rush. It reminds me so much of the ethanol gold rush we had in the 2000s. I mean, all these plants are coming online in the back half of the year. The government's backing it up. Whether you agree with it or not, it doesn't really matter. It's coming. And the amount of biodiesel we need, we need to produce a lot more soybeans. Right. A lot more soybeans. We need a lot more soybean acres to be planted. And I don't think we're going to, we need to get that ratio of soybeans to corn at the right level to promote that. And so I think the market is starting to put pencil and paper together and saying, look at this crush. This crush is not going away. And, what do we need to do here? And I just think that that's what the market is trying to do now. We know South American crops were supposed to be record setting, and now they're not. We don't know how they're exactly going to turn out, Casey, but we know we're not looking at top end Midwestern soybean crops in South America. It's going to be something less now.
Gotcha.
And so that puts the market on edge. And so I really feel that this is a demand-driven story. There's a good demand-driven story here, not just a weather story.
Yep.
And, like I said, unless the government changes the policy, which of course they can, but I don't see that happening while Biden is in office. And we know we have 2 years before that might change. And so I think we got a 2-year runway where the idea is more acres. And where are those acres going to come from, Casey?
Right.
Well,
yeah.
They're going to come from corn. They're going to come from, where? They're going to come from wheat. They're going to, the fringe acres are going to have to give up those acres to soybeans. And it's bullish for the entire grain complex, because if you have less corn acres, it's bullish corn.
Yep.
If you have less wheat acres, it's bullish wheat. And so this whole thing, this gold rush for soybeans, is a bullish long-term driver here for grain markets overall, absent a weather story.
Right. That was my next question. So where are these soybean acres going to come from? And you're right. I mean, if you take a look at where it's at right now, corn is kind of soybean acres, from what I've talked to and heard and listened to and those kind of things. Soybean acres are edging out corn acres a little bit right now, just because of input costs and those kind of things there. But when you start looking at, explosive, soybean numbers that are out there, and you're starting to see more and more every day where there's this volatility in the marketplace is just, down 20, up 20, down 15, up 10, those kind of things, especially in the soybean complex. It's almost like the soybeans are starting to kind of trade separate from everybody else, just like you've seen wheat do in the past.
Well, just think of this, Casey. We're having some very good rains in Argentina right now. Mm-hmm. Very good rains. This should be bearish soybeans.
Right.
Yeah, they corrected a little bit, and because the demand is there's another force. As I just mentioned, this is more than just a weather story. It's a demand story, and that's really, the corn story in the 2000s wasn't really a weather story; it was a demand story. And then whenever weather got involved, it made it really explosive. You're right; it's starting to separate itself, and because it has a problem, it needs to address that problem. And the problem is that it needs more acres than current prices are likely to give them, at least the way it looks to us at this point. And that's not something you always get in these kind of markets, but we have it at least for the next 2 years. We have this runway, and so one has to recalibrate what that means for the grain markets, grain pricing, and such forth and so on. And that's it's an interesting dynamic now. And of course, if the Chinese feed demand monster comes back online here in the second quarter, as they rebuild their hog herd, they need more soybeans to crush for bean meal feed and everything else. So
right.
It's a good story, and that's why we continue to be favorable to grain markets heading into the spring before we might place some kind of a formidable top that prices all of that in, because the market's job is obviously factor all these things in. I mean, it's not like this renewable diesel story is a secret.
Right.
It's not a secret. So the market's going to price this in, we think, fully by the spring, and price fully the weather by the spring, and that could be where you might have a formidable top, and we continue to feel that might be a place that could place a sizable top for a while, and producers might want to be really putting pencil and paper together to make sure they don't let that blow off top or whatever it is that we might see run away from them back to the downside. So even though the long-term story is bullish, we might price most of it in here in the first half of the year. So
right on. Okay. All right, let's talk about milk for a minute. Last time we talked about milk was hovering around $22, and it's right around 20 right now, but it's been bouncing back and forth between 20 and 22 for the past, almost 2 months now, it feels like. Get down to about 19 for a minute, but then it'll jump back up. And I guess as you look at milk right now, there are some headwinds there. I mean, even though the price is high, there's some margin issues there that they're still fighting against. So I guess as you look at milk, what do you see happening there?
Just looking at the milk market from a technical perspective, when you have to look at everything, right? Everything is second quarter Class 3 milk went right to the 2014 all-time record high for the first quarter. And so on a chart, when you see that would be a logical place for the market to have a setback. And they did. We gave $2 up just like that. Doesn't mean it's a top, by the way, but it means that was the first. You would expect to have the market have a pause.
Right.
Now, what usually happens is you then surge the market back up again and say, is that the top? Or are we going to go forward? And that's what we don't know yet. But so technically, this was a logical place for the market to have a setback. Now, there was a lot of fear buying on the idea that a lot of these milk plants were running at less than full capacity because of labor shortages due to Omicron sicknesses, and that was reducing the output for cheese and butter and that sort of thing. And because of that was causing a crimp in supply, which kind of like what we see in the cattle, the packing houses, they can't bring the animals through, so the beef price takes off because we're not producing enough beef. Same situation, but there's a flip side to that, right? Eventually, you get sick, and what happens? You go back to work because after 2 weeks you're healthy, you're fine. You go back to work. So and we found out that with the packing houses, they do come back online, they do get back to throughput, and they do get back to producing more beef again, and the beef price comes back down. And so I think we're seeing some of that happen, where we're starting to see some of those plants coming back online or starting to increase their capacity again, bringing some of that extra cheese back online. So that's another thing causing fundamentally some of this whipsaw volatility. Our best guess, Casey, is that we're probably set up for a healthy correction into the late first quarter, early second quarter, in an ongoing move higher. That's our best guess at this point. We think as these plants come back online and as they increase their output, it's probably going to prevent the market from taking out those 2014 highs and allow for some setback to take place in the market. a healthy correction, but I mean, not that actually would be supportive to a much larger move later, which has been our forecast. So what we're trying to say to producers is just make sure you just take care of your second quarter milk. Don't try to get too cute. Make sure you're protected, and don't let those, because those prices are profitable. And we haven't had profitable prices in milk in a long time. And so that's what we're suggesting, but we still think the outlook for milk looks positive longer term. We just think that we did hit a roadblock, and we think that roadblock probably is going to hold this market back for now. So
right on. Well, Shawn, good stuff as usual. Folks want to reach out to you and get more information about what you're doing over there at Hackett Financial. What's the best way to do that?
Our website is Hackett, Hackett, advisors.com. Lots of information on there to give your listeners a really good idea of how we look at things, to see if our information could be of value to your listeners.
Right on. Well, Shawn, thanks for being on the podcast, man.
I love being here always, and maybe on our next podcast we could talk about the Tonga volcano. I've been getting a lot of questions about it.
Yeah, that would be a good one to talk about, because a lot of crazy things have happened there.
Yeah, because I get so many questions, and I think there's a lot of misconceptions. Might be a good topic for discussion about what does it mean or doesn't mean or whatever, but maybe something to talk about on Tuesday.
Yeah, there's some very cool pictures they found on satellites when that thing went off and everything else. That was a pretty neat deal. But yeah, there's a big impact there in the the South Pacific Sea there. So it's a lot of stuff going on. So anyway, Shawn, appreciate you being on the podcast. I'm Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram. That's where you find the latest editions of the Moving Iron Podcast. Also go to Moving Iron LLC for all moving iron related topics. So with that, I am Casey Seymour with Shawn Hackett. Let's move some iron, folks. Out. You want to have a meaningful competitive advantage to help sell more equipment. Whether you represent the sales, parts, or management department of an implement dealership, there's a surprising amount of complexity when it comes to tire, wheel, and track technology. Let Axon worry about that so you can get back to supporting your customers. Axon has leveraged years of experience to create a streamlined process that gives you a proven path to help today's grower and sell more equipment. The roots of their organization go back almost 100 years to the invention of the rubber tractor tire. Supporting agriculture is the number one driver of Axon, from product development through sales and service. To find more or become an Axon dealer, head over to axontire.com. This podcast is also brought to you by Valley Transportation. Valley has over 33 years in the trucking business, moving ag and construction equipment across the country. For more information, go to valleytransinc.com or give Parker a call at 800-657-4910. At Valley Transportation, our goal is to help you reach yours.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here. Moving iron.